All right, guys. It's Wednesday. Today's Wednesday, right? We're coming to the close of the month. Going to be some window dressing, maybe. 28th. The markets are down slightly, kind of flattish, off the lows. But I managed to get some downside bias into the portfolio. You know, yesterday we were talking about how I'm so exposed with the upward bias. I think yesterday's number was like 70 more percent of the portfolio had an upward bias. Now with the trades I did today, I ended up increasing my downward bias to 34% of the portfolio, neutral to 12, upward to 54. So you can see I'm getting a little more balanced here. And there was a lot of good setups today for me to do that. So I have some work to do in July, taking the downward bias. All right, enough grab-assing. So I have a lot of trades to go over, so I'm going to go through these as quickly as possible, okay? Okay, so here's Discovery Financial, ticker symbol DFS. What you're going to find I did here was I took stocks that are in downtrends, right? Typically the 20 is below the 50, and the stock is trending lower with very poor relative strength. And I'm looking for MACD histograms that are turning over. So that's the pattern that I like. So I found a bunch today, so that's where we're going. And let's start with DFS. So here's the chart in a downtrend. MACD is rolling over, bounced off its 20-day moving average, which is below its 50-day, and sloping downward. DFS, I bought the August 19th puts, $92.50 strike price for $5.50. So here's Akamai. You can see it's dating a downtrend. The 20 days below the 50-day on the daily chart, and it came up, tested this 20-day, and bounced off pretty aggressively. Has this nasty gap here, which is a lot of overhead. So I took a downward bias to this. I see the MACD histogram rolling over. So Akamai, AKAM, I had bought the August 19th $90 strike price puts for $4.51. Aptiv, APTV, so clearly in a downtrend. This thing keeps hitting its 50-day moving average as resistance, the 20 days below the 50. This thing hit the 20, bounced off hard to the downside. I went ahead and I went long puts here. So I had bought the August 19th $90 strike price puts for $5.90. Here's PPG Industry. PPG. We made some money with this, I think, a few times in the past. But you can see here, stocks in a nasty downtrend. Can't get above this 50-day moving average. Hit the 50-day yesterday, bounced off it to the downside. We went long puts here. I anticipate this thing's going to start trailing further south. PPG, we wrote the August 19th puts, $115 strike price for $5.70. Here's Starbucks, SBUX, SBUX is the ticker. You can see here again in a nasty downtrend. It tried to break above its 50-day moving average a few days ago, but failed. Today bounced up against it and then failed. So I'm taking a downward bias to this with long puts. So I went ahead and I bought the August 19th $75 strike price puts for $3.81. Royal Caribbean, RCL, nasty downward move, especially over the past couple of months. Came up, tried, I mean, the gap here between the 20 and the 50 is just so severe. So this is in a major downward trend, really bad relative strength. Came up here, couldn't even test this 20-day and started rolling over. I'm anticipating some further downside, so I went long the puts here. So for RCL, I did the August 19th $35 strike price puts for $3.85. Here's Caesars Entertainment, ticker symbol CZR. Caesar, yeah, so we made some money with this in the past. Clearly in a downtrend. You see it's getting even worse, the 20 below the 50. This thing hit its 20-day yesterday, and then between yesterday and today, it bounced off to the downside hard. So I'm anticipating further downward pressure in this name. So I went long the puts here. So for Caesar, we had bought the August 19th puts, $40 strike price for $4.05. So this is Clorox. Clorox, I did this bear call spread, and I'm anticipating that by next Friday, not this coming Friday, the Friday after, and it is a shortened week because of 4th of July, so there's not that many days there. I'm anticipating that the stock is going to trade below 145.44 on expiration. I'll be able to keep the spread. So I'm going to show you this spreadsheet that I built. So this is, so if I plug in the CLX, it's going to give me the implied volatility. Let's go over to this chart. You can see the implied volatility for Clorox is above 2 standard deviations of the norm. So it's offering a lot of premium right now through the implied volatility, which is what kind of coaxed me to actually do this spread because there's a lot of premium up there to collect. So at CLX, we had bought the July 8th calls, 155 strike price for 10 cents, and we went ahead and we sold the July 8th calls. This is the 145 strike price for 54 cents. If it closes below that threshold, I'll just be able to keep that spread by next Friday. Carnival Cruise. Okay, so here's in a nasty downtrend, very similar to the Royal Caribbean that we were looking at before, right? Similar pattern. I feel like this thing is rolling over. I went ahead this morning, I went long the puts. Since then, the stock is cratering. It's down 15%. It's getting absolutely fucking mauled. But I think there's further downside to go. So I went long the puts. So I had bought the August 19th, $7.50 strike price puts for 68 cents. Here's Ford. Ford isn't clearly in a downtrend, really nasty. Can't really stay above its 20-day moving average, which is below its 50-day, all trending lower. Yesterday it hit the 20-day and it rolled over pretty hard. This morning it's continuing that downtrend, down about 2.3%. I went long the puts here, anticipating further downside pressure. So I went ahead and I bought the August 19th puts, the $11 strike price for 69 cents. All right, so here's Norwegian Cruise Lines, right? NCLH. You can see a theme here. I'm taking a downward bias in Carnival, Royal Caribbean, and also Norwegian. So I just think that this sector itself has run out of steam, and you can see here, very similar to the other two charts that we saw for Carnival and Royal Caribbean, this thing is in a nasty downtrend. Came out yesterday, tested its 20-day, and just got smashed today. This stock is down now almost a little over 9%. So I did the bear call spread here. I just need this thing to stay below 13.12 by next Friday, and I'll be able to collect the premium. So here I had bought the July 8th $15 strike price calls for 3 cents, and then I sold the July 8th $13 strike price calls for 15 cents. Again, if it closes below that threshold, I get to keep that spread, and that's what we want, generate some income. Warner Brothers Discovery is the new name after AT&T fought so long and hard to buy Time Warner. What a disaster, really. So this is a WBD. Really ugly looking chart, right? It's down today almost 4%. It's just selling off. I'm anticipating, just based on the relative strength and based upon this MACD histogram rolling over, about to go negative, I see further downside here. So I went long the puts. I had bought the August 19th $12.50 strike price puts for 98 cents. Fortune Brands. So you can see my thinking here. These are the setups that I like. These are stocks that are all downtrend. You see the 20 to 50. It's following its moving average lower. Yesterday this thing hit up against its 20 and couldn't break it. Sold off. I anticipate further downside. I see the MACD here starting to roll over, so I went long the puts here, anticipating further downside. With this one here, I had bought the August 19th $60 strike price puts for $3.50. Live Nation, very similar to the others, right? In the downtrend, hit its 20, bouncing down. I anticipate further downside. I need this thing below 76.30 on or before the expiration. So let's take a look at what we did here. To capture the downside, I had bought the August 19th puts. This is the 82.50 strike price for $6.20. Here's Keysight Technology, ticker symbol KEYS, Keys. And again, in a downtrend, hitting its resistance and bouncing lower, I went ahead and went long the puts here to increase that downward exposure that I have in the portfolio. So I went ahead and I bought the August 19th 135 strike price for $6.20. Here is Rockwell Automation, ROK. You can see here, nasty gaps. Going to be a lot of headwind here to try to get through this area. But came up, tested 20, sold off, tested 20 again, selling off. So I'm anticipating further downside here, so I went long the puts. So with the ROK, I had bought the August 19th puts, $190 strike price for $8.80. And that is all I have. A lot of trading today. I tried to go through it pretty quick. But definitely happy that I increased the downward exposure, the downside exposure in the portfolio. Okay, so until next time, let's whoop it up.